The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Just Basil Chapman sitting in for the one and only Larry Pesavento. And Larry's away today, so it's my pleasure to be here. I'll be filling in for this hour. And, of course, I do my usual show at 11 o'clock, the Tiger Technicians Hour. So this is Trade What You See. And what we're looking at, what we're seeing, actually, is a very negative market response to the jobs number. I'm seeing in the den, I don't have any TV on here. I've got one right over there, but I refuse to put it on. And it's someone's saying 38,000 total? Well, that's impossible. Well, you know what we've been looking at? We've been looking at the Japanization of our bond yields I have been for 12, 13 years. So whatever it is, the Fed is just going to be putting off. And as I said in my webinar last night, I had a webinar for subscribers. You can still get it, actually. It's archived. It'll be archived today. And it's something you might want to review. And specific things that we go through. We actually looked at the dollar. We looked at gold. Gold was pretty close to the 200-period exponential moving average. And the dollar was in a peak E and was ready for some kind of a pullback. And what we're looking at right now is we will go through all these different numbers. Well, let me just say that there are a number of factors that are really important at this particular time. I'm just going to go to this Dow chart for a moment. What we're looking at is the similarity from May a year ago, the 19th of May of 2015, when there was a pattern, a channel that came down from the top that was made at 18,351 in the Dow. And that channel was really quite faithful. There was one breakout to the upside, which failed, and that was the breakout that went all the way, finally took out the lower trend line support, and boom, you went all the way down to the August low. That whole fractal, that whole pattern itself was repeated in a slightly different way, but it was the same concept. Same sixth highest peak in the Chapman Wave, peak F, on the 3rd of November at 17,977. And then what happened, there were a series of just like before, series of higher highs and series of lower highs and lower lows, and making a channel which was not pierced to the upside, but it had the same result. We went to what I call a peak, B minus, failed, and then on the 4th of January, that third candle pierced the support, and it went straight down to the 20th of January, 15,450, 3,000. So that was a 2,500 point drop. The previous one was 3. And what we're looking at now is a situation where it's all in microcosm. There was a steeper but shorter decline. It broke above the channel decisively, and we had two bars that were really different, whereas the others on that repellent from the trend line down to the lower trend line was just straight down. This one saw 2 days, yesterday and the day before, where there was quite a nice move to the upside by the close of the session. So what's really important in the pattern will start to repeat. I'm beginning to think it won't repeat, but it will repeat if there is a close by Monday or Tuesday, and the Dow closed at 17,838 yesterday. If the Dow closes underneath this candle right here, 17,664, the low of the 1st of June, just yesterday, if it closes below that, I have to say, you know what? We might be seeing exactly the same repetition of the pattern. My thinking is that the lower yields, now, let me just run through. Now, I've gone through that. What is absolutely needed in this particular picture right here is that Dow 17,900 or higher must be hit, and by next week, without taking out the 17,600 key support. Now let's get that out the way. The next thing we're going to look at is the E-mini went to a higher high, which makes leg B in the weekly chart with the technical still very strong. And the E-mini is down 875 at 2,095.25. It hit a high today of, let me move this across. It hit a high today of 2106, I believe, round number. Yes, a round number high of 2106 in leg C. Now, leg C happens to correspond in the Chapman Wave, I'll just do this real quickly, to a peak C that was made 3 days ago. And we need to see, as I say, above 17,899.24 will start leg D. And a couple of trend lines here, but I'm going to make it clear. A close below 17,600 says, uh-oh, you're going to have a little bit of a timeout here, extending the weekly chart as well. So what we're looking at is, and I'll run the numbers, I'm a little behind. I'm going to go to the GLD, which is current. The GLD is at 118.23, up 2.56. Now, what's really important is that gold had an absolutely spectacular move, going up $27 to $12.40. Let me see if I'm now catching up. I'm a little behind on this contract here. This is a continuous contract. No, I'm right ahead. We're up 28 at 12.40. We almost hit the 200-period exponential moving average in the daily, which is at 1198. We went down to, that was interesting, 1201.50 on May the 31st, and now we're quite a bit higher. Now, we've got to be real careful. Is this a single leg A up? In other words, is this a move that's just emotional with a kind of response that is just permeated by shorts having to cover, not that much new buy? We will know if by Sunday night's trading overseas, going into Monday afternoon, go all the way through to Monday afternoon into Tuesday morning at 10 minutes past 10. If gold is held above 1230, and in fact it's trading in the 1250 area, and now I can do the dollar because it was way behind before. Now the dollar's, I've got the dollar down. I don't think it's caught up yet on this contract. It's at 94.24, down $1.32. I'm only showing it at 94.76. So right there says it made a peak E in the Chapman Wave. That's where you can start. I'd spoken about this in my webinar last night. It's up against the 200-period moving average. It should pull back a bit. This is more than a bit. This is actually a serious decline. The weekly chart is still not bad, but my contention has been that gold has been in a very important consolidation phase since it made its peak E top in the continuous contract back at, that was on the 2nd of May, and that was at 1308.30. We've gone all the way down, as I say, to the 1201 area, rebounded very strongly here. And the rectangle that I drew for the consolidation said that within this area, there should be some kind of a rebound in gold. Now, the most important thing about this particular phase, as we're looking at it right now, is will the market say, aha, now the Fed is forced to maintain low interest rates. They can keep sprouting this. We intend at some point to raise rates another quarter of a point. But at this stage, if that is that 38,000, that is, wasn't the president yesterday talking about a job recovery? This is really quite shocking. So I'm going to be back in a moment. Basil Chapman sitting in for Larry Pesavento, and we'll have the opening of the market only at 9:30. We've got 15 minutes to go. We'll look at many of the different contracts. I want to look at soy and wheat. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, folks, we're back. So, all right, so gold is up huge. It's up $28. Let's just run this down. Gold is down. So the dollar is at 94.72. It is down $1.45. Let's just run some of these other numbers here. We want to look at this. This is quite incredible. Soy is up 18 3/4 at 11.63. Just a whopping move. I could give this another count, but I'm calling it C, which says you should still get to a D. So it's really close to a pullback. The pullback could go to, it could go to this morning's low, or it could even go to yesterday's low at 11.06. That's a 60-point move, almost a 60-point move in 2 days. And look at the weekly chart, leg D. It is a whopper of a move. It's getting real close to being overbought. I don't know if it's up, a limit up, but that's soy. And look at corn. C is a symbol. This is the continuous contract in leg E. It's trading at 417 and a quarter. It's up 0.48%. It's in leg B in the weekly chart. So it was lagging very badly. Corn was for a long time, and now it's on fire. High-grade copper. Let's look at high-grade copper. It's a different kettle of fish, as we say. High-grade copper 2.11 is up 0.048. Oh, it's in leg C. So it's a good action with the copper rallying like this. Not a great weekly chart at all, but it's a positive that it's moving up. But even more important is looking at the. Let me just go to this. I just want to go in order. I now want to go to bonds. Bonds are up here. Oh, look at this. We spoke about this yesterday on my show, and then last night in my webinar, I discussed this, and I said, if bonds are able to close above this high right here, above 165 and 17/30 seconds, the high of the 16th of May, that would, all above these above all these resistance points that have been going on for, since February of this year in the weekly chart, then there's a really good chance you will actually make a leg D to the upside above the high that was made on the week of the 12th of February at 168 and 330 seconds. I'm talking continuous contract. So the prices change on every cycle. They get smoothed out. That's why these letters are up here and not right above the notes, above the, I think I'm talking music here, above the price bars. So what we're looking at is that this incredible, spoke about this last night, this incredible up channel, which goes on for 20 years. Look at this. If I go to the dollar TNTYX, the 30-year yield, that yield has been making arch formations, lowercase h formations, like a lowercase m, with slightly lower lows and lower highs forever. And now it's in its smallest little range, and it's still coming down at 25.21. That is 2.521%. And that, let me show you something. Keep your eye on this chart. Look at this channel. Look at the pink line. Look at the green line. Keep an eye. Here we go. Once, twice, 2000, 1998, 1995, 1990, 1984. 1984, I'm sorry, it was 1980, May of 1984. The high was way back. Well, on this continuous contract, it's at 139. Some of us remember interest rates at 16, 17%. So this was the actual rate itself of 13.9. So that means that, plus whatever it is, the rate that people get. But then it plummeted down to 1986's low, bounced once, and that high of October of 1987, the day of the crash, October the 19th, Larry likes to talk about that. I was I was there as well for the crash. October the 19th, that spike in bonds was the last spike, and it went to 102.50. Of course, it's all smoothed out, but go with the numbers that are here. The pattern is exactly right, and the highs and lows are exactly right. The numbers might have changed. But from that moment on, that was the high that created the top trend line, and I created the lower trend line. I'm going to make it a little bit right there. Is still going on. I'm going to make it a little different so that it actually touches more of the lows. And look at this. We're in the middle of this so it's a 20-year, 30-year. It's a 30-year downtrend line. I've never seen 30-year downtrend lines. So now what's really interesting, and we're getting closer and closer to the open today of the market. I think that rates are now telling us that we could be looking at, I've been calling it for, I don't even know how long. It's just in the 1990s I noticed it. And I started to talk about the Japanization of U.S. bond yields at some point. And since in 1983, I predicted, based on the work that I was doing, that rates had made a top, probably a serious top, and a number of things happened where it was the first time they ever used real credit, they called it. I think it was Baybank. Was that the name of the bank? You use real credit. So we used real credit, my wife and I, because rates could then, based on the property that we had, so that rates would be coming down. And what we're looking at here is that those rates have constantly come down. There was a spike low of 2.26% at some point January of 2015. As I'm writing it here, let me just double check. Is that still right? Okay, that's changed. That's 22.26. And then a spike up to the 32 area, and now we're back down at 25. So this is a phenomenon that is absolutely, it's imperative to be looking at, because it says things are happening, and we should be looking in. Let's look and see today. We'll see when the market opens exactly how the HGX, the Philadelphia Housing Sector Index, acts. It's at 235.99, and if it starts to rally sharply, homes could start the home builders could do well. Toll has pretty much the same price. Hasn't been acting all that well. It's way off the highs. We'll see. Maybe Toll goes from 29 to 30, breaks out 30 and a quarter, and suddenly breaks out to fresh levels, trying to get to the 32 level of the 200-period exponential moving average. Now we can look at the dollar. The dollar's at okay, now it's kind of caught up. It hasn't quite fully caught up. This is the dollar. For my subscribers, we've been long the dollar for a while. If we get taken out, it's via another instrument. If we get taken out, we get taken out. One of the reasons is that my contention was that gold should have a time more than a price pullback. It turns out in price, actually, that's a pretty big move, down to 1,200 from 1,300 and something. So that is a big move. But I'm thinking that gold could still chop around here. I'm not sure this is the move for gold right now. It's a fantastic move on the day. It's up $30. It's where it is next Wednesday, going into the beginning of the week to the middle of the week. If it's pulled back to under 1230, my contention will be that gold just needs a little more time. Pretty much done with its low. The gold stock should start to find really good bases. But if the dollar, in fact, the dollar takes out, at this point it's in the 94s. If it takes out 94 and starts to trade below 93.50, I think gold has made its move for the downside and now will make steady higher lows and higher highs. I'll be back. Basil Chapman sitting in for the one and only Larry Pesavento. We'll be back hopefully as soon as the market opens.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Well, we are looking at 9:30. The market has opened, and the Dow's down 54. The S&P is down 4.5. Dow's down 58, and we're looking at a market that is digesting the news, and we're going to see what happens. For my subscribers, we actually are long the Dow from 2 days ago, the opening 2 days ago. And we might even be adding this morning, and we're going to be adding to the long side. I haven't yet added to the short side. We'll see about that, how that unfolds. But there are actually some very strong positives to the market. And right now, if you're looking at the IWM, it needs a bit of a breather. It's had a spectacular move. Look at that beautiful leg to the upside, single leg, going from 107.99 on the 19th of May to yesterday's high. So 107, let's call it 108. 108 to 116.5. I would say that that's a pretty big move. You could have a little bit of a pullback here. I hope there is a pullback here because I would like to. I'd like to buy this. I think it's looking very good in the weekly chart. So it tells me that the close today, going into Monday afternoon, is going to be very important. And if you're looking at the QQQ series, now the NDX, when I did this last night, we were looking at the FANG, Facebook, Apple, Netflix, and Google or Alphabet. It's hard for me to actually say Alphabet. 108, 110, 60. Alphabet, they were in consolidation modes. Other things are picking up the slack. And that's really important to see. Now I'd like to look at the GLD. The GLD, this is very interesting. You see all the activity there going down to the low of 115.20 yesterday, the June the 1st, 2 days ago. And then yesterday's action was an inside day. Now you might not see it, but I'm going to tell you something. First of all, 116.39 and 116.40. Okay, so that was filled in. If I circle this, you will suddenly see something that you maybe didn't see before. That is the price right there. That's that gap, a huge gap. So it's going to be very important how we close. Why? Because what we're looking at is if within the commodity sector, let's go to the TRCCI. This is the Thomson Reuters Equal Weight Commodity Index. Let me just move this away so you can see what's in it. It has, I think it's, because it has an equal weight, it has all the commodities. And I think the softs, the hards, the works. And right now, it's trading with a gap to the upside at 420.06. And this says to me that there could be a recycle in the Chapman Wave, but if I'm very strict about it, this is leg B, a brand new B. But I'm going to show that there could be a recycle, and it could be ABC. For now, I'm going to call it a B. All right, brand new B. And I'll put the plus sign at the bottom here to show that that could be the case. And it's leg E in the weekly. And that is saying that on a shorter term basis, shorter intermediate term basis, commodities have really turned around. Commodities are strong. And that when we look at the GDX, I had questions. Someone wanted to know about it yesterday. And I'm not sure what I would have actually answered yesterday about GDX. And where is the question? Maybe I'll also do it. Oh, there it is. GDX. Walter wanted to know. My schedule does not provide an opportunity to call in, but wanted to see if you have a chance in your show today. That was yesterday, and I didn't get the email. It was only sent, yesterday afternoon. In your show today, meaning I hope today is rather than yesterday, because yesterday would have been too late, to review GDX. Also interested in GDX as a potential buys with an eye on holding as opposed to a quick trade. Hope all is well and the weather is cooperating, allowing you some outdoor tennis time. Funnily enough, this week I've gone to the gym, but I haven't been able to play tennis. I've just been too busy with my webinar and some other things. I'll be back again over the weekend, I hope. Okay, so the GDX is the gold miners, the market vectors gold miners ETF. Nice bounce. And there's a trend line resistance right here. So Walter, I'm sorry, I didn't get to you yesterday. I didn't get to you because I didn't have the email until last night. So what I'm going to say to you is this. If you had asked me that yesterday, I might have said that the gold stocks are holding much better than gold, and that if you're interested in the longer term position, you could start a position yesterday in under 23. Now that we're at 24.41, having opened at 24.08 and gone 36 points higher, 38 points higher, I'm going to suggest that whereas I would have said just a small position, now I'm going to say to you, because the weekly chart suggests that it should go to a leg D above, it's at peak C in the Chapman Wave. We look for 4 peaks, higher peaks that is. It should go above 26.17 at some point. I'm just saying some point now. It could be sooner rather than later. I'm going to make the suggestion that you actually take a position right now, I don't know if you're even listening, at 24.46 for 2 reasons. It's just what I would call a starter position. It might turn out to be the greatest position because everything goes up from there. But I'm calling it a starter position for 2 reasons. One is gold has pretty much done what I was expecting as a consolidation. And number 2, within the context of the consolidation, what I've been saying, what I said last night to subscribers in my webinar, that I don't think gold is going to go down that much more, but the upside might be fairly limited so that it goes into a trading range as it continues to consolidate a little bit. But a lot depends on the dollar. And if the dollar is now made a serious top and it's going to continue down, the next entry for your GDX would be kind of tough. So it was at 24.47 just a moment ago. It's now 24.55. So I'm just going to say I would be considering a nibble at this particular point if you don't have anything. But that nibble is $1.50 higher than the ideal level, maybe even $2 higher than the level yesterday. And therefore, the amount you put in at this particular point, just for risk reward, I would make it just a little bit less. So starter position, but it's really just a starter position that you are prepared to say this position on a worst case basis could pull back all the way 10%. It could go down $2 and it's a starter position. I will not be bothered at all unless it takes out 21.80. 21.94 is the low that I'd be looking for. But if it goes under 21.94, somewhere in the 21.80s, I say, it could be deeper. But as a starter position, I prefer to say to you, could you have patience, maybe try to get it below 24, but it's only a starter position. Later in the week, I'll probably be saying, okay, now you can start adding to it. It's not wanting to fill the gap. Gold is holding beautifully. Dollar's still going down. But let's give it a little bit of time. Okay? So that's the way we're looking at it in the context of the market. And now let's go to silver, SI. Silver, in fact, has gone D, E, F, A, B, C, D. It's the second one. So silver's a nice pop to the upside. I'll do that when we get back. At this point, the Dow's down 90, S&P's down 10. And we'll be back soon after this break. Hold tight.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hi everyone, Basil, Chapman, sitting for Larry, Pennsylvania. So the Dow's down 98, the S&P's down 11, and let me just show you something here. This 200-period moving average, the Dow's at 17,740 right now. If the Dow was to take out the low of yesterday morning, 2 days ago, that was on the 1st, the low of 17,664, that would say the match with those previous declining channels is starting to come back into focus, even though there were 2 good days yesterday and the day before. So I'm watching this really closely. My contention has been that it is different this time, that the third time we will not pierce and break down and go smashing into the 16,000s as you would expect if there was a perfect match, that there's a consolidation that's going on. And that what's very interesting in my work is that the S&P, look, yes, let's go to the SPY. The SPY went yesterday to a leg D. It's making a peak D. But the technicals are really superb. The stochastic is at 94%. The MACD is still rallying, but it's not rallying as strongly as it did before. But at this particular point, these are still very good technicals, and they will break down, absolutely break down. The SPY's at 209.76. You start to see the SPY go under 209.20 into the 208s, and all of a sudden you will see that stochastic drop really quickly. But at this particular point, look what's happened. You've gone to 1092 to 1093 by 1 penny. You've gone to a leg D in the weekly chart. So one of the concerns I had was that in the Chapman Wave, when you get to a D, the fourth highest peak, look what happened at that D right there in the SPY back on the 17th. I think it was the 17th. Yeah, the 17th of March at 205.23. And look what happened on April the 20th at 210.92. Those were peak Ds, the fourth highest peak, and there were sharp declines, much sharper decline from the 20th, going from the 211 area down to the 202.78. That's a big move. And now we've gone back up. So this is going to be very important because at a D, but I like things to be in sync. And the Dow did not do that. And that's a little unusual. So it's worth watching very closely. And the IWM now is pulling back a little bit more. It's down 92 cents at 115.80, but it's had a spectacular move. Stochastics at 96%. I just have this feeling based on the technicals that this is a very important consolidation moment in the short-term daily charts. It's how the weeklies react by middle of next week, Wednesday. Where are we? And my thinking here is that we might see by the end of the day a little bit of buying, saying, well, now the Fed has to keep rates low so they can start to try to help the economy. So we had a little thing going here in the den. People were talking about the president talking yesterday and talking about the job recovery and all sorts of things like that. And I said, my surprise has always been, I mentioned last night, I don't understand why the president, I do understand it, but it doesn't make sense to me why the president doesn't talk about the stock market having had one of the greatest moves, a 300 to 400% rally. It depends on which indices, but at least a 300% rally since the 2009 low. But that means that everyone who's been putting money into funds or whatever it is in that particular time has made pretty good money, right? That's number one. Unless, of course, they're chipping change. But if they just every month putting away their money, it's been a pretty good time for them. And that is a huge number of people. That's, tens and tens and tens of millions of people that are involved in that way. Now, it doesn't make the day-to-day, the job hunt and all that, doesn't make it easier. No, it doesn't. But I'm trying to separate what is a positive. And one of the things I'd said, if President Obama never ever discusses the stock market, it's anathema to him to discuss it, and yet the market goes up threefold. What would happen if Bernie Sanders gets in, who's anti-capitalist completely? What would happen to the stock market? Would it go to 36,000? That was just a joke. But isn't that interesting? So the attack on capitalism is only going to get stronger. That is my opinion, regardless of who gets in. It's starting to happen. Youth today are talking about socialism as if, well, they've never experienced it, so they don't even know what it's all about. We'll see what happens. All right, so let's get back to our story here. We've got the QQQs, QQQ, three of them, is at 110.01, down 57. Still after yesterday's candle, this is a pretty darn good candle. The day is young. We're not even 20 minutes into the trading day. Anything can happen. We could see the volatility index. Oh, I haven't spoken about the volatility index. The VIX index, which is trading right now up 65 cents at 14.28. It went to a low this morning. Oh, how did that happen? A low this morning of 12.90, and it's trading now at 14.28. If the volatility index later on gets close to the 1460s, what I'd said for my subscribers, every day I send out this chart here with a great deal of information. I send out this chart if I need to, the 120-minute chart, and then I show that would likely be the second or third chart. Usually my first chart is the Dow chart, and the second chart is this chart here. Let me just show you something, if I can get there, right there. This is what I like to show subscribers, and it's very important in terms of the overview. So I give what's called the overview and market today. So yesterday I mentioned that on Tuesday we had gotten Wednesday we had gotten my Chapman Wave trend gauge reading, high reading, that anticipated there should be a Dow slide in the morning. I called it a rug pull. And then later there'd be a rally. That's exactly what happened. I said yesterday, I expected the Dow, if my case is correct, we should close up in the plus 40 area. It's exactly what we had, plus 48. And the S&P up 6, and the S&P was up 6. And then today I said, what we're looking at here, a reaction to the jobs report is key. Dow minus 40s or more, S&P's minus 6s or more, comp index minus 10s or more at 1010. Is a negative response. But if for any reason the market digests the news as good news, and there's a Dow plus 40s or more as the VIX slides soon after the opening this morning, it augurs well for a positive close. So far, that's not happening. But I like to give the scenarios. And what I said right here in this little quintile over there on the left, the VIX closed at 14.34. Over 14.60s, the market slips. Under 14, the market rallies. And right now it's at 14.30. So it's climbing. It's getting to that 14. You get to the 1460 or higher level, this market will not be able to get out of its own way. So this is going to be a very interesting 10 past 10 is really what we'll be looking at. I'll be back, of course, at 11 o'clock. Now, let's go to a couple of other things here. I want to see what potash is doing. POT, potash, it's up. It's up 14 cents at 16.63. Couple of things that I did last night, and I'll talk about them as soon as we get back. I spoke about the steels. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We have Daisy from Denver. Daisy, how are you? Hi, Daisy. I can hear
Hello?
you. Hi.
I can barely hear you.
All right, I'm right here. Is that better?
Yes, that's better.
Okay, Daisy, you wanted to look at BIB, which is
well,
the...
I did, but I just heard you talk about the VIX. And so what I really wanted to ask you is, why isn't the market going up if we got a bad jobs report? Because, you know, it means that the interest rates won't go up.
Okay.
Probably.
Hey, that's a great question. In fact, I was debating that over the last 2 days and last night, and I said something's a little weird here that's going on. And the most important thing about it is that it is because the job recovery is so poor that it impacts the potential for profits. That's the way I think Wall Street's looking at it right now. But I'm with you. The lower rates should turn into a positive. So I think that's the reason why the VIX is now only up 58 at 1422. It should be much higher. In fact, it should be, I would put the VIX at this point, it should be at the 1442 area, maybe even 1460. So if it starts to decline, the market will say, oh, okay, that's really showing more buying pressure than selling pressure. But I think you've got yourself a really good question. Later on in the day, the market might say, you know what, this is really bad news for the economy. It's not whether or not the Fed can do anything. If you look at the foreign countries, they've lowered their rates to a negative. And yet it's not happy. At this point, it doesn't seem to be helping the economies. So let me just do this for a second. I just want to do the BIB because we're about to run out of time. This segment's always a little bit shorter.
No, that's okay. I say there's no attack on capitalism. It's an attack on corporate corruption and government collusion with corporate corruption.
Hey, it's a good ending to the show, and I'll talk about that in my hour coming up at 11 o'clock. I think it's a combination. You've actually hit it right on the head. Thank you very much, Daisy. We'll speak to you soon. Basil Chapman sitting in for Larry Pesavento. Here comes Tommy O'Brien, and Daryl. Stay tuned for the next.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.